Welcome back to the channel. My name is Brad and today is Sweet Tea. Sweet Tea, for all those new to the channel, is I'm going to talk about the market conditions, what's going on, give you some general information, talk about my retirement maybe, and other things that come to my mind as we go along. It's kind of scripted, but not 100% scripted. So first off, this is not financial advice, legal advice, or any other advice, just some guy randomly on the internet. Yes, me, random. China is clearly the largest manufacturing superpower. Yeah, it's almost 2x the United States. Not good. Not good at all. BYD pulls ahead of Tesla to become the largest EV automaker. We are lucky Tesla has many other options just than automobiles because they are no longer the largest manufacturer. That's interesting knowledge. I didn't even know there was other manufacturers that large compared to Tesla in the EV world. Now, I knew that there were EVs over in China, but not as large as Tesla, but we'll just go ahead and go with it. So the next one is the Mag 7. Yes, the Mag 7 was 55% of the gains of the 2024. That's a lot of the gains. All the other gains came from all the other stocks. So if you didn't have the Mag 7, you might have an issue. Yes, there you go. In the last 150 years of the S&P 500 returns, it looks like where we're going to end up in 2025 is somewhere between 10 and 15%. That would be a guessing game, but that is historically where we ended up. We'll see how it goes. Who knows? I hope it's 10 to 15%. We need to at least be above 8. Gotta love that 8% number. So AI, tech boom fuels the 2024 market. 43% of the gains came from technology, 15 from financials. Consumer discretionary was 11. Industrials was 6.4. We really in the nation need those industrials to be a little bit higher. All right, we're going to talk about the airlines. I used to fly a lot. Ooh, doggy. I used to fly a lot. Now, I'm going to slightly disagree with their rankings. I definitely feel that Delta is a better airline than American. That is just me personally. That's my experience from actually flying these airlines. Southwest, okay. I don't like being a cattle person, but they're changing that from what I understand. So it is what it is. And I would never fly Spirit. Never. I made my wife fly Spirit a couple times. But that was just me. It's because I was not a nice guy. Actually, she was going to fly to LA and it was very inexpensive and it was a direct flight from where we lived. And all of her luggage was with me. And I flew out earlier in the week and she came out for the weekend. Fear and greed. Fear and greed is sitting at 32. Yes. And you can see that a week ago it was 30. A month ago it was 56. A year ago it was very greedy at 76. So remember, you should be greedy when everybody else is fearful. Just something to think about. This came from CNN. You can go free to their website if you're not lazy enough to actually go look at this yourself, but you can toggle this to fear and greed over time. And you can see how low we are, and that's normally where we sit, and then how far it goes up, and you can pretty much see the chart. I'm going to say over the next few months, as we get the new president in and everything starts to settle down, we're going to have a lot of turbulence and there's going to be fear and greed all over the place. But remember, I'm in retirement. You should build your retirement plan and think about how you're going to retire. because you shouldn't be worried about volatility. Market momentum. Right now, the S&P 500 is over the 124. 24. Where did I come up 24? I'm literally looking at the screen and I say 124. Like, I can't even read 125. Man, and I even got my reading glasses on. Anyway, the S&P 500 is above the 125-day moving average. That's good. And for those that don't know, when I reinvest my money back into my cover calls, I look at the 50-day moving average. And I am going to share with everybody this week, I think Tuesday will be the day, what my cover call, and only my cover call section, produced in income last month. I think you might be surprised. I also have other investments. I have 5 pillars. I share that all with the members. The latest spreadsheet actually shows the members exactly my share count, my price that I paid on average, and what I got for distributions for all the shares. The problem I have is I have 5 separate accounts. 5 separate accounts. And that is the biggest issue because I have a Roth IRA, I have a rollover Roth IRA, I have a IRA, I have a rollover IRA, and I have a health savings account. Yes. So all of mine, or I'm going to say 99% of my money is in tax deferred or tax free accounts. When I say tax free, that's really my Roth. So when I withdraw at 59 and a half, and that's another one. That's something else I should go ahead and clarify for everybody. I am not withdrawing any money from my Roth. All my money is coming out of my IRA, and that's because of how it's taxed coming out of the Roth before I'm 59 and a half. No reason to mess around with any of that. Take it out of my IRA, go the next 2 years, 2.5, 2.25 actually, and get on down the road. I have enough money coming in income that I probably don't have to worry about that 10% penalty. We'll just go like that because it is a 10% penalty and I am paying it. I do pay my taxes. That is something that everybody should do, even though if I could become Mexican and come back across the border and get free health care, I would. I am just joking with that comment, but crossed my mind. Came in hot? No. Anyway, you got to pay your taxes, right? Last thing we want to do is get in tax trouble. So the put call options. You can look at the put call options and see that if it's above 1, it's considered to be bearish. And right now we are not bearish. There you go. Other market news. We got the S&P 500 at 23%. In 2024, the NASDAQ rose 30%. The Dow gains nearly 13. I don't even know who really plays the Dow, but wow, everybody else is doing the S&P 500 and NASDAQ for the most part. But hey, maybe you're a Dow fan. I don't know. All the major changes in indexes rallied in 2024. The last 4 trading days of the year delivered the losing streak. And this losing streak's marking the longest year-end decline since 1966. Something to think about. So the losing streak that we went through was the largest losing streak since 1966. So keep that in mind. Consumer spending. We are lucky everybody's using those credit cards. I'm only joking. Do not use your credit cards if you can't pay them off every single month. That will destroy your wealth and your retirement. Just something to think about. Talking about that, I had coffee the other day with a retiree. and he's been retired for a long time. And I said, what is the number one advice that you give somebody going into retirement or in retirement? And he said, make a budget and stick to it. I think that's great advice, and it wasn't my advice. It was from somebody that's been retired, and I'm going to put him into his 70s. So anybody that says something like that deserves some respect, because he's been retired for a long time, and he's saying create a budget. So you should create a budget also. It's just good habits to create a budget. Don't be lazy. Create a budget. GICS sectors. Communication sector closed out to be the top performing at 34% this year. And of course, you had the tech stocks, right? I mean, Google and Netflix. But anyway, technologies definitely led the way for some of this growth. Consumer discretionary ended up being the top sector over the last month. Okay, that hasn't changed in a while. That's because it's Christmas time and everybody bought stuff. Thank you, Amazon. Actually, that's a good comment. I read an article the other day that retail stores made a comeback. That majority of the growth was at retail stores and not Amazon. That was, I don't know if I have that article or not. Anyway, consumers remain the biggest driver of the economy, accounting for roughly 80% of the growth in the first 3 quarters of 2024. That came from JP Morgan, and I have a link to the article below just in case you want to go read it. I'm going to actually track how many people actually read that article. No, I'm not. I have much more bigger fish to fry than see if you're clicking on any of the links that I leave below. I will say this. I get a lot of information from Seeking Alpha, and they have a special going on. I leave the link down below. You can go watch it. They're going to do their top picks for 2025 for their stocks. We're going to take a look at them to see if there's some kind of index that maybe we can get on and see how that plays out. I still feel that AI and maybe quantum computing is a way to go in the future, but I don't see any quantum computing ETFs that are income. Yes, I am still looking for income. I may add something like that to my growth section. And what I consider to be growth, unlike other people, it's fine that other people don't do it this way because they do theirs and I do mine. But growth is uncapped. That's the way it is. I'm not going to get capped. You can get capped if you choose to, but that's you. Me, growth means something that's uncapped. Because why get capped on the way up? Now, I can understand if you're paying for something like your margin and you have to pay that down, so you have to get a little income to pay it down. Yeah, that's fine. That's nothing wrong with that whatsoever. And everybody has their own trading strategies and trading methodologies. And since I'm talking about that, this book here, read it. Good book. You get good resources, but he is all about closed-end funds. You can't retire without a closed-end fund, according to this guy. Closed-end funds. You can actually get the book at the Amazon link down below, but it's a good read because he gives you some good resources for closed-end funds, and it gives me more opportunity to review stuff. But he takes profits of every 5% increase in closed-end funds. That's a good one because EOS was up 26%, so he would have lost 23% of gains because he would have sold it. I was just saying that maybe you should think about just jumping onto other people's methodologies, because this guy here says sell at any time it's above 5%. Okay, but you know, he's been around for a while and he manages his money and he runs his own investment firm, so he's doing very similar, but he targets more that 7% where I target 8%. And by the way, if I target 7%, it opens up a full new world of funds at 7%. Totally new world of funds at 7%. I target 8. So I limit myself on the funds that I can choose because I am targeting 8. And that's just because that is where I am comfortable. You might be comfortable at 7. You might only need 6. And that is 6%. Man, we could target tons of funds at a 6% withdrawal rate. So just keep that in mind. Just because I do 8 doesn't mean that you have to do 8. I just think 8 is reasonable. So value stocks. Finally, value stocks outperform growth equities. Interesting. Is that a long-term play or is that just short-term? And the last one is from my LinkedIn. I am going to go ahead and say it's from my LinkedIn because you can probably tell this was translated. Yes, it was translated into English, and I am leaving the article link down below. This is from some Belgians that I know. Just roll my eyes when I say Belgians. They're raising the age to 66, and now people are sitting there thinking they might not be able to work until 66 because people over 55 are facing these changes, and that's going to cause them issues. Now, my thought on this whole article is they don't plan to step away early like I plan. I planned on stepping away at 59 and a half. I didn't make it. I said, why wait? And that is a great conversation. Why wait? I think that I'm going to outlive my money, so why wait? I am going to go ahead and say you should think about it also. Not financial advice, but if you have the money, why wait? Now, I can understand if your kids are getting done school, and hopefully when you're in your late 50s, you're not having new kids. It happens a lot. But we stepped away, my wife stepped away, I stepped away, doing a little YouTube, gives me something to do. But at the end of the day, you should chase your dreams as soon as you can and retire. It is snowing outside, and the last thing I wanted to do if I was working was have to go to the airport today or tomorrow. Just a thought that maybe you don't want to be doing corporate travel in bad weather. So there you have it. This week will be what I used to call my 500K. It's still 500K. It's actually slightly larger than that. And I want to show exactly how that has paid out over the last month and share that with you and tell you what I'm thinking going into 2025. I think the market is going to target that 10 to 15%. I am going to actually go out on a limb and say, hey, we will probably hit 20% early in the year and draw back down later in the year, because if cycles follow previous cycles, August, September, we should start seeing maybe a little contraction, but who knows? Who knows what they're going to do? Never know. Don't know what gets passed, what doesn't get passed. But let's be hopeful. Let's be hopeful that the market does something positive, because positive is always better psychologically. And I'll tell you, I look at the stock market and I see a red day. I look at it going, oh, I cringe. But then I go, I have money sitting on the side, so it's a buying day. And remember, 9 days on average are red. So don't look at it every day. Well, I look at it 3 times a day, but that's because I'm on Seeking Alpha at least 3 times a day, and it shows me on the left-hand side if it's red or green and what it's doing. So I'm going to be reviewing some other CLOs this week. give you some CLO news and show you what they're doing. I talked about claws and how they've actually changed the name from Paradigm to the mothership's name now. So hopefully that brings you some value, that maybe you get a little less stress. And everybody should drink some sweet tea. I didn't even drink sweet tea this whole entire episode. But at the end of the day, stay positive. Let's have a good 2025. Thank you for watching, and God bless.